Okay, today we have Tom Wheelwright. Now, you may not know who Tom Wheelwright is, but Tom Wheelwright is one of the most sought after accountants in the world. He's the accountant for Robert Kiyosaki and Kim Kiyosaki, the whole Rich Dad company. And he wrote an incredible book that I just finished reading called Tax-Free Wealth. And the reason Tom and I are connecting here today is that both Kim and Robert, after I interviewed them personally, suggested that I bring Tom on. And so Tom wrote an incredible book called Tax-Free Wealth, How to Build Massive Wealth by Permanently Lowering Your Taxes. Seeing with how many people are struggling right now in the world, with how many people are losing their jobs, and myself paying more in taxes this year than I made 2 years ago, and getting really totally blindsided, I thought it was an appropriate time to bring such an expert like yourself on.
Well, it's good to be with you, Jake. And I always appreciate Robert and Kim. They hate paying taxes, and so fortunately, we've been pretty successful with them, and they're pretty happy about that. So it's a message that everybody needs to know that quickest way to put money in your pocket is to reduce your taxes.
So speaking on that, you started the book. I found it interesting. You were talking about, to begin the book, with the U.S. tax code. And you were saying out of the however many 5,000 page document, there's only one line that talks about increasing taxes. And the rest of it is actually, in essence, about lowering your taxes. And you discuss how really the tax law is actually an incentivized structure for you to pay less in taxes. And I thought that'd be an appropriate place to begin because so few people even know anything about taxes. So maybe you could just take us there to begin.
Yeah. So most people are scared to death of taxes. I mean, let's face it. The only thing that's more scary to them than death and public speaking is the IRS coming knocking on their door. And so they're scared to death. And part of the reason they're scared to death is because, oh, this is so complicated. I mean, Einstein said it's the most complicated thing in the world. And so they're scared of it. But when you get down to the concepts of it, it's actually fairly simple. And like you said, there's one line in the tax law that says all income's taxable unless we say it isn't. And then there's another line that says nothing is deductible unless we say it is. Okay, right? But there's literally thousands and thousands of pages of an instruction guide of, look, if you do this, we'll give you this tax benefit. You have to do it this way. These are the rules behind it. But if you do it, we're going to give you tax benefit. And what people don't understand is that the tax law. Yes, the tax law does raise a lot of money for the federal government, and that is its primary purpose. But there's a very close secondary purpose, and that is that the government likes to manipulate the economy. Okay, we've seen it just very recently, right? The CARES Act. The government is wanting to manipulate the economy. The easiest way for the government to manipulate the economy is through the tax law because people hate paying taxes. So if you give a tax benefit, for example, for adopting a child, you might adopt a child. It'll help you adopt a child. If you want people to buy houses instead of living in apartments, then we're going to give tax benefits for buying a house. Well, we all know that we have those tax benefits. We've been taking those tax benefits for years. What we don't realize is that they're primarily incentives, and the government saying, look, you do this, we'll give you a tax benefit. I can't tell you how many people I've heard say, well, I need to buy a house because of the tax benefits. And I'm going, well, it's not really the reason to buy a house. But yes, that is exactly what the government's telling you. They want you to buy a house. Now they want you to buy a house under $750,000, but they still want you to buy a house, right? So they're going to give you that tax benefit. Or if they want you to invest in oil, or if they want you to invest in clean energy, or if they want you to invest in employees, they give you tax benefits. I mean, for example, this new PPP program, the forgiveness of that income is not taxable. That's a huge incentive for businesses to keep their employees employed, that they're going to get this non-taxable income.
Absolutely, and I think it's ironic because it's literally not. There's nothing else that we know less about, I think, than taxes. So I thought that was a fitting place to begin because we literally know nothing about it except we're supposed to pay it, and if we don't, we're going to go to jail. Like that's the only thing we know about it, right? And So in the beginning of your book, you say, pretty frank, I'd love to help you, but I really can't help you if you don't understand the rich dad, poor dad's cash flow quadrant, and you don't understand that the majority of the tax benefits are going to come when you move from employee to self-employed to the other side as a business owner or an investor. And right now we're seeing, they just came out with another 3.8 million people today as of, right. I don't know what day it is, April 30th or something, said that they lost their jobs today. So that's like over 20 million since the start of the month.
It's 30 million in 6 weeks. It's a lot.
In 6 weeks, yeah, that's a lot. So right now, and then, everything for the last quite a while has gotten more and more and more expensive. So you're finding that if you're making the same amount of money as before, it's becoming harder and harder and harder to live. And so just that alone is an incentive to move to the other side of the tax quadrant, but then to the other side of the cash flow quadrant. But then you're talking about, you said you can't help anybody really unless they are actively moving to an entrepreneurial side. Why is that, and why is that important?
Well, think about what the government wants to do. They have a choice, okay? They could give an employee an incentive, but the employees consume, okay? That's the consumer, right? They can give the consumer an incentive, and that helps. It helps the economy. I mean, that's the $1,200 check that people are getting is a tax credit. That's what it is. They're getting an advance payment on a tax credit, all right? Or you can help businesses and investors. Well, where's your bang for your buck if you're the government, okay? You can give $1 to an employee and they'll spend $1. But if you give $1 to a business owner, they'll hire more employees. They'll sell more goods. They'll produce more income. They'll stimulate the economy because they're not consumers. Business owners are producers. So this is really what we have now in the U.S. especially is a consumption tax, right? You're taxed if you consume, but you're not taxed if you produce. So what the government is saying is, look, we'll be your partner in your business. Okay? And we'll give you a tax benefit if you produce more. If you produce more jobs, if you produce more energy, if you produce more agriculture, we'll be your partner, knowing that down the road, they're going to get that money back because guess what? They get a share, they pay for a share of the expenses, but they also get a share of the income. So what I would say is, look, you're a partner with the government, whether you like it or not, right? Just look at your pay stub, and you'll see that you're a partner with the government. They're taking money out of your paycheck, right? So why not have a better partner, right? So the way we have a better partner is to do what the government wants us to do. The government wants us to invest. They want us to produce. This is, and by the way, this is not just true in the U.S. This is true in Europe. This is true in Russia. This is true in Asia. This is true in Australia. This is true all over the world. I've traveled the world with Robert and Kim, and I always study the tax laws around the world. And all governments favor producers in the tax law because they found out a long time ago, we give you a little bit of a tax incentive, it'll go a long ways.
So what are the baseline things that you can begin to do to offset in the most simplistic way to begin to offset your taxes? And what are the things that you would, as someone that's starting, that's realizing, wow, I'm really getting myself hammered here, and it would be nice to keep an extra, at the minimum, just an extra 10% of my money. What are some simple ways, and then we can move into some more complexities?
Well, rule number one is you need to start a business, or you need to start doing some serious investing like real estate, and outside of the stock market, right? The stock market, there are tax benefits in the stock market, but they're tax benefits so that you don't have to pay tax on the income from your stock earnings. Okay, that's like a Roth IRA, right? But there are no tax benefits that will offset your other income, like your wages and your business income and so forth in the stock market. So the government doesn't favor the stock market. It actually penalizes stock investors, which is another big realization people should have, is that, look, I get penalized if I invest in stocks. I get benefits if I invest in commodities like agriculture, energy, or business, or real estate. So you have to let's start by just starting a business. I think what a lot of people, 30 million in the last 6 weeks, have realized is that when you have an employer, you only have one client. You only have one customer. And having a single customer is a very risky place to be. So by being self-employed, by at least even having your own business, now you have multiple customers. So you have multiple people who are paying you, and if one of them decides not to pay you any longer, you got other people that can pay you immediately, right? You don't have to wait to say, well, am I going to get another job, right? Do I have to sign up in the unemployment line? You don't have to do that. And so once you start as a business owner, all of a sudden the tax law opens up for you. For example, everybody right now is doing what we're doing, and we are doing a video conferencing from home. That's what we're doing. Now, here's the thing. If you're an employee doing video conferencing from home, you don't get to deduct the office in your home and your video conferencing equipment. You don't get to deduct that. Even if you had to buy it instead of your employer buying it for you. However, you're a business owner like the two of us, then guess what? We get to deduct this equipment, this headset, the computer, the studio, all of that is deductible. A portion of your home, that's all deductible because you're a business owner, and you don't get those deductions if you're an employee. So there's a lot of things that you use on a day-to-day basis, whether it's a cell phone, a car. All right, don't use that much anymore. But a cell phone, a car, your computer, an office in your home that everybody's using right now. Guess what? All of that becomes deductible as soon as you start your business.
Yeah. So I started my business, as I told you before we aired. I really started it when I was about 20, when I published the first book, and I was lugging it out of my car. And I didn't realize right away, because I didn't know what I was doing, but I eventually became very clear on a really interesting distinction, because I realized that the vast amount of my life was actually a tax write-off that would be deductible against my expenses, and I'd pay less. And I realized there was first of all, I was like, wow, that's a legal cheat code. But then I started to get this interesting distinction that I talk a lot to my wife about, who's employed by my business, and that's pre-tax dollars versus post-tax dollars. And I thought that is the most incredible thing. I should buy something that, there's some way that it has to do with our business. I say, what are you doing? We're supposed to use pre-tax dollars for that, not right. Post-tax dollars. Could you talk, for someone who's maybe never heard that term, could you really talk about the difference between the two?
Sure. Let's say you're in a 30% tax bracket. It's not hard to get to a 30% tax bracket, especially when you combine federal and state taxes, right? You're going to be, a lot of people are going to be in a 30% tax bracket. Okay. So let me ask you a question. If you could get 30% off of everything you bought, would you do it? Would you take action to get a 30% discount on everything you buy? A 30% discount on your car, a 30% discount on, on your computer, on your cell phone, on all of these things that you're buying. If you could get a 30% discount, wouldn't you do that? And everybody would go, well, of course I'd do it. And yet, guess what? If you're in business and you follow the rules, now don't get me wrong, we're going to follow the rules here. You follow the rules, then basically the government's saying we'll pay 30% of what you buy as long as you commit to devoting that, whatever you're buying, devote it to your business and use it to actually make more money and expand your business.
Yeah, it's really fascinating. And it actually wasn't something that I realized until I actually saw it in real effect in my life. And then you start to see, okay, this is why the rich get really, really, really rich.
Well, think about this. Okay, let's say you go out and buy a new pickup truck, okay? And you're going to spend, let's say you spend 40 grand on that pickup truck. All right. All right. What if you could go into the dealer and say, okay, I know that your base price is 40 grand, but how about if I give you 28? What do you think? And the dealer's going, no way, I lose money on that. And yet that's what's going on. You go and buy that pickup truck and you use it solely for your business. You're literally paying $28,000 because there's $12,000 of tax you're not going to have to pay. So, this idea that, first of all, it's not cheating. The government expressly wants us to do this. Okay. They want us using our vehicle in our business. And by the way, they want us using SUVs and trucks. I don't know why they do, but they do. They want us using SUVs and trucks. If it's over 6,000 pounds, you get this big deduction. If it's under, you don't get nearly as much deduction. So they're saying, look, behave this way and we'll reward you. Behave a different way, be an employee, no reward.
So before we go into a little bit more complexities, at the core, and like you said, 30 million people losing their jobs, I think this is a big awakening where people are realizing they weren't as safe as they were before. And two, with all of this money printing, they realize I'm going to have to make a lot more money. And I feel like this is going to be something that breeds a lot more businesses and side businesses and entrepreneurship endeavors that begin. What would be a ground framework for somebody that has been, say, an employee for a lot of their life, but they're starting to realize, hey, and maybe they still have their job, but they're starting to realize, hey, I'm going to keep my job, but I'm at least going to start a business on the side. What would you advise for someone? What is an appropriate place to start when someone says, well, how do I even begin? What do I even do, right? Because as you know, and as Robert teaches, we aren't taught even how to think as an entrepreneur.
Well, I'd start with some really simple stuff. First of all, I would start by opening a bank account just for your business. Okay, start by opening a bank account for your business. Second of all, make it a real business. The difference between Robert talks about the S quadrant, which is the self-employed, and the B quadrant, which is the big business. And there's a big difference in how much those people pay in tax, right? In the S quadrant, a typical small self-employed person will pay up to 50 to 60% in tax, whereas a B quadrant person will probably pay only 20%. Okay, why is that big difference? And do you have to be a big business to get that? And the answer is no. A small business can get that as long as they behave like the big business. The problem is that most small business owners, they start with their own bank account. They use their own money. They don't get a separate bank account. They don't get a separate credit card. They don't set up an entity like a limited liability company or a corporation. So, you're going to need to get some education, which is the very first thing I would do, frankly. I'd get just some basic education, read Tax-Free Wealth. It's on iBooks, for heaven's sakes. You don't even have to get it in the mail. Read some books. Read Rich Dad Poor Dad. Read Tax-Free Wealth. Read Own Your Own Corporation, Garrett Sutton, another one of the Rich Dad advisors. These are basic books to show you what you need to do to get started. Okay, and it's cheap. Okay, it's really inexpensive to start up. But then what you have to do, of course, then you have to go through the whole, okay, what business am I going to be in? Who are my customers? What am I going to sell? How am I going to do that? You have to do that, but don't forget the structure of the business, because when the IRS comes knocking, they're going to want to make sure that you're behaving like a real business. So they're going to ask you for things like corporate minutes, and you're going to go, what? What's a corporate minute? Okay. And they're going to ask you for financial statements. You're going to go, financial what? What are those things? Okay. And so I would suggest that's why you need some education right off the bat. Once you do that, just realize that more people are online right now than ever in the history of the world. Literally in the last few weeks, more people are online than ever in the history of the world. So you have all these people that are online. I look at those people, those are prospects, right? Those are people who could be your customers, and they're dying. They're dying for opportunities to spend their money. Look at how much time people spend right now shopping online, when they're sitting at home. during this pandemic. So there's never been a better time to start a business, and you do need a team. You need people who can teach you. You need to get some education. Take the time, get some education, start there, and then and make sure that and then you're going to start building a team. You're going to have a bookkeeper eventually. You're going to have an accountant, like a CPA. You're going to have an attorney. You're going to have a banker. You're going to have an insurance. You probably have an insurance agent, but you're going to need somebody for business insurance. So there are things that you need to build out, but don't let that scare you. Start with a bank account. Start with a bank account. Set up your entity. Get a business entity like a limited liability company. Set up a bank account for that entity. Preferably get a credit card for that entity, and then you can really start going.
Yeah, ironically, an advice that I got after a few years running pure self-employed, I wasn't even incorporated. And someone had said to me, you need to incorporate, because once you do, everything will change, your whole mindset, and you'll take yourself more seriously. And I thought that was silly. And I was like, $500, and I don't want to spend that. And I did it. And ironically, that's when things really started shifting in my life. And so I thought that was I think that's a fascinating distinction.
I had a similar experience when I started my accounting firm. I started out of my house. I mean, you're trying to minimize expenses, right? And I had a buddy who was an insurance agent. He said, "You know what? You should come office with me. I'll rent you an office for $250 a month." I'm going, $250 a month. I could probably swing that. And so I moved into that office. Let me tell you what. The minute I moved into that office, all the referrals started coming, right? I completely changed the way I behaved. I mean, my business went from 0 to 500 miles an hour just by renting that $250 office space, because it was changing your mindset. So having the corporation or the limited liability company really getting set up properly. I mean, get a real office. If you're going to office in your home, which we're all doing right now, get a real office. In other words, set aside a room that is just used for your office, and it will make a big difference than if you're sitting on the couch in the living room doing your business. It just makes your environment makes such a big difference, and that includes your corporate environment as well as your personal environment.
So even if you're in your office, you can still wear your boxers or underwear, everybody.
Hey, well, we know that CNN they're wearing their shorts and on TV, so why not?
So before I get where I want to go next, I want to reverse about 1.5 minutes to what you said earlier. You said that even if you are a small business, you can still run yourself like a large business. Maybe you could elaborate that and talk about the mistakes someone makes self-employed and that, because that's an important distinction that I actually came across on accident after years of being in business for myself, but being at the 40% tax rate. And then I made some shifts, and all of a sudden everything opened up to a different level. So maybe you could talk about that distinction.
Yeah. So, when I speak with Robert and Kim, we use the cash flow quadrant. And when he asked me, he says, so what do employees, a well-paid employee, what are they going to pay? They're going to pay 40%. What if you make the same amount of money as self-employed? And I said, well, you're going to pay 50 to 60%. Well, what's the difference there? The difference is that you're not just paying your share of the taxes. You're now the employer. So you're paying the employer's share of the taxes. Well, once you become, once you set up your business properly, and that's probably going to be, you're going to be taxed as what's called an S for small business corporation, an S corporation. Now you're not going to pay 100% of Social Security taxes, right? You're not going to pay 100% of Social Security taxes. You're only going to pay about half the Social Security taxes that you would pay if you were not incorporated. So it's very important to start that business entity. The other thing to remember is that if you're not incorporate, if you don't have the corporation, the limited liability company, then what happens is that you're reporting your income on your personal tax return, and it's on a Schedule C. Well, people ask me, what's the number one red flag for an audit? It's a Schedule C. So here's what you've done. By being a Schedule C, behaving like a small business. I'm trying to keep my expenses down. I don't want to pay that $500, for that incorporation. By doing that, not only have I doubled my Social Security taxes, I've doubled the amount I'm paying in Social Security tax by doing that. I've also increased my audit risk by about 500% by doing that. And the reason is very simple. A Schedule C is just a profit and loss statement. Okay, so if you have a corporation, you have to have all the financial statements. So there's three basic financial statements. There's an income statement or profit and loss. That's what goes on a Schedule C. But there's also a balance sheet, and there's a statement of cash flow. Now, Rich Dad Poor Dad does a really good job of explaining these three financial statements, frankly, because it fundamentally is an accounting book. And Robert and Kim's Game Cash Flow 101 also actually has you do these financial statements. So I play Cash Flow 101 when I'm teaching entrepreneurs how to improve their cash flow and how to reduce their taxes. I always have them play Cash Flow 101 because when you play that game, now you get to practice doing it, and you see that what the IRS sees. And what the IRS sees is, look, you're more serious about your business if you have a balance sheet. If you have a corporation or a limited liability company, you're more serious about your business. What they're concerned about is they're concerned about people cutting corners, right? And it's easy to cut corners when you don't have any check and balances. Well, there's a reason it's called a balance sheet. It's to give you a check and balance, and it helps improve the possibility that you're going to report accurately. And the IRS is number one looking for accuracy. So you just start behaving. You have a whole different mindset when you start having to behave like a real business. That's why I say don't do this, even if it's just a side business. Treat it like a real company. Think about, I remember, I'll tell you a quick story. So when I started my business, my CPA firm, within a couple of years, I had 10 employees. And I was talking to one of my buddies who I'd known before when I was an employee. And he goes, how'd you build your firm so big? How did you get to be 10 employees so fast? And I said, well, I'd never started out with the goal of being small. That was never what I wanted to do. I always had planned to be big. And so that's where my mindset went. I know you do a lot of personal development work. Once you start thinking bigger, all of a sudden, guess what? You get bigger. And if you start thinking about taxes the way a big business does or a professional investor does, all of a sudden your taxes start dropping drastically, just like what happened to you, Jake.
Yeah, when I went from self-employed, which I did for a while, to S corp, that was it was actually an extremely significant difference in not only my mindset, of course, but obviously at the end of the day on how much money I kept. So I think that's a very important step for everyone to consider. So let me ask you, one of the things that really prompted me, I was prying Kim on some tax questions, was because just before, and this is what led you and I to talk, is we had a tremendous year. I had a tremendous year in business last year, and my profit margin is might be 85% or something like that. And so, pulling in, a lot of over seven figures on 85% margins means I'm left with a lot of money. And I didn't know that was going to mean I was going to have an incredibly huge tax bill. And so I felt like an idiot. And I realized there's different levels to it, right? Like the first level is go into business for yourself, consider, for me, it was becoming an S corp, and growing my income, having pre-tax money available, having some basic expenses, got me in a lower tax bracket, increased my income. But then I just got hammered in my taxes. And how do I move to the next level, or somebody watching this that pays a lot in taxes, but they also have a fairly significant income or business, and they're so focused on their business and they're so focused on the skills and all these things. So they're not looking at the next leg of the picture. What does someone like me or someone like that do?
Well, you find team members That's what you do. You find people for your team. I mean, once you get to a certain level, and and it's really just a level where basically you're ready to grow. You're ready to pay less tax. You're ready to actually do something different than what a typical self-employed person does. You're ready to be thinking like a big business. There's no big business that doesn't have a team of accountants, doesn't have a team, it doesn't have that does their own bookkeeping. No big business does its own. No CEO does the bookkeeping for the company. I mean, that would be crazy. Why you wouldn't even think of that? And yet small businesses do it all the time. They go, I'll do my own bookkeeping. I'm going, why would you do that? That's really inexpensive to hire somebody to do that. You could be making money, at 85% margins. Why would you be doing your own bookkeeping? Okay. And then you think, okay, who next do I have on my team? Well, that's got to be your CPA. CPA, certified public accountant, and you want a CPA. There's two basic types of CPAs. There's the 99% of CPAs, and they focus on past history. They're historians. They look at last year, last month, last quarter, and that's what they're focused on. Or there's a few CPAs that focus on your future. Okay, how do I reduce my tax in the future? How do I be strategic? How do I create a plan of action to reduce my taxes and build my wealth? And when I started my business, my first CPA firm 25 years ago, my goal was to actually, look at how can I help entrepreneurs and investors reduce their taxes, because I'd found that the really big CPA firms, the ones where I started, like Ernst & Young, they weren't taking on entrepreneurs anymore. And they did when I was there, but they consolidated and everything, so that if you're basically not a Fortune 1000, they're not interested in you. Okay, so there's a big gap. So I find that there are some local CPAs. It's like when you go to a restaurant, if you want really good food, do you go to a chain or do you go to a local restaurant? You're going to go to a local restaurant, right? Because the local restaurant's always going to have the best chef and the best food. The problem is finding the right local restaurant. Okay, so what we actually decided to do a couple of years ago, when we formed Wealthability, was to create a network of CPA firms around the country where I could teach them how to, help people reduce their taxes. I could teach them how to run their business better, and so that they could be looking forward. And we've had an amazing, oh my heavens, in the first year and a half, in less than a year and a half, we had 35 CPA firms around the country, and they literally are coming in every week because they want to understand, look, I don't want to be a historian anymore. I want to look towards the future of the client, and I want to really help the entrepreneur. CPAs really do want to help, and having a great CPA on your team, as Robert and Kim will tell you, is a very big deal.
And what are some of those things? Is it in buying investment real estate? What are some of those things that when you are making a lot of money, and obviously there's businesses that have high revenue, but they're 3% profit margins, right? But someone that is pulling a lot of cash in without that much of it going out, what are some of those types of vehicles or tools that you can deploy?
Well, think about the basic rule. Are you a consumer or producer? Right? So you're looking at things that produce. So you can produce housing, okay, which means that you're investing in multifamily or single family housing. You can produce real estate that serves businesses. That's commercial real estate. You can produce real estate that serves factories. That's industrial real estate, right? You can produce agriculture. That's farming, ranching. You can produce energy. That's solar or wind energy or oil and gas. I mean, those are all production that the government wants you to do. So the key is, frankly, I think the key is find something you're really interested in. Find something you really enjoy. Okay, some people love real estate. Other people don't. Some people love natural resources. Other people go, well, I don't want natural resources. I want to do that. Some people have a huge interest in agriculture or in clean energy. So it's really finding something that you really love doing. And some business owners, frankly, they just want to invest in other businesses, and that works too. So it's really anything that is going to be basically the raw production. So you got to think of, what tier are you on? If you're buying mutual funds, that's not gonna work for you. But if you're building the business, right? If you're the business building the actual business, and eventually that becomes a stock in a mutual fund, right? That owning that business and putting the money into that business will reduce your taxes. So anything you're going to do right now that produces what the government wants produced is going to reduce your taxes.
So when you say oil, natural resources, things like that, and you say you don't invest in the stock market for this. This is something that myself and many other people, we lose you there. Are you saying instead of, let's say there was an oil company or uranium company or different natural resource or whatever, are you saying you make a private placement into that company outside of a Vanguard account, and you have a private placement at a company?
Well, you actually basically have to be a direct investor in the oil well. You need to be a direct investor in the oil well. How do you be a direct investor? Well, typically it's done through partnerships. Okay. And you do have to take on the risk, by the way. You have to be a general partner. You better make sure they've got really good insurance, because you are taking on the risk. And I'm an oil investor. I love natural resources. I went to school. I got my master's degree at the University of Texas in Austin, and I started my career in Salt Lake City, Utah during the big gas boom days, and minerals were a big deal. So I love natural resources. That's one of the areas I invest. Because I love it. I'm really interested in that area. And yeah, I mean, if you invest through a partnership, let's say you've got a small oil developer, right? A small driller, and they go out and they buy up the leases, or they lease the land, right? And then what they'll do is they'll go in and drill for oil. So it's the actual drilling, it's the actual production that gives you the tax benefit. If you invest in a derivative, like a stock, that stock's a derivative, right? You're one tier away from the actual drilling. If you invest in a stock, that's not going to do it. If you invest directly in the well, that's going to give you the benefit.
Interesting. So far, yeah, I've heard you talk about the importance of, especially right now in the economic climate that we have, everyone might be best served to consider moving into the other side of the cash flow quadrant, talking about starting a business. And when we're discussing that, so one of the mistakes that I see quite often that occurs is, let's say someone is a massage therapist at Massage Envy. They listen to Tom Wheelwright and they go, "Woo, I'm leaving. I'm quitting this place. I'm going to go start my own business," right? So they go and then they sell their massage service at $30 an hour. And pretty soon their hands are tired and there's only so many hours in the day, right? And they say, well, I'll increase my price by $10. And what happens, I found, and I'm just using a very everyday example with massage work, is that you eventually hit this point where you hit a saturation. And there's only so much going into business specifically with yourself and for yourself. There's a saturation point where you can't really charge that much more money at a certain point, and you only have so many hours in the day. And I see that that's a common thing where people hit a limit on their income ceiling. That's a term I like to use, it, income ceiling. And can you elaborate on that and offer some advice for someone so they don't go down the pitfall of eventually having more work than they did when they were employed?
Well, that's the definition of an entrepreneur, right? We work twice as hard to make half as much. That's kind of the way we're built. But no, here's what happens. So you're talking about people who own their job. They still have a job. They just own it. Okay, so that's the problem. If you own your job, you're still limited because you have a job, right? So if when you talk about, when Robert, for example, talks about the S quadrant versus the B quadrant, the S quadrant, you're owning you basically own your job. I mean, you're small, you're doing the work yourself. You're not building a team of people. You're not using other people's money. You're not using other people's time. You're not using other people's talents, right? It's all about you. So the key is that other, right? Somebody else. And the way you do that is through creating systems where in our company, that's what we're known for, is our systems. So the reason, for example, we can tell somebody that if you come to us to work with one of our CPAs, we can reduce your taxes by 10 to 40% within 3 months or less. The reason we can do that isn't because we have the best CPAs in the world. It's not. It's because we have a system that they use that creates that tax benefit. Okay. So what you have to start looking at is, and Robert, in Rich Dad Guide to Investing, it's a really old book, but it's a really good one. He talked about the BI triangle, business investor triangle. Okay. And what he's talking about, one of the main things he talks about there is the systems that you have to have in place in order to not be owning your job. So, you hear the old adage, I can work in my business or on my business, right? Well, it's not easy to do because, you went into massage because you're a good massage therapist. That doesn't make you a good business owner of a massage therapy business, right? And that's where Massage Envy comes from. For example, Massage Envy is a franchise. And so people decided, well, I don't want to be the business. I don't want to do the massage. I want to have other people do the massage, but I want to own the business. So franchise is the easiest one, frankly, is to actually own a franchise because they have all the systems in place and they have all the training in place. But I would also say that if you really wanted to learn how to do business, I would look at multi-level marketing pretty early because it's all about sales, right? And they have great sales training. And it's not just about doing it yourself. I mean, that's the thing. You have to change your mindset. Like I said, when I started, it was never my goal, small accounting firm. Okay. I mean, and now we have little firms all over the country and we have clients all over the world. Well, why is that? Because my mindset wasn't there to be small. My mindset was always to be big. And so everything I do is centered around, okay, what do I have to do differently so that I don't have to do it myself? What are things that I don't have to do that I can get somebody else to do? I'm basically a lazy person. So as Robert will say, the laziest people in the world are the business owners because we get other people to do everything for us.
I read a quote by John D. Rockefeller and he basically said, if young people want to get rich, what they need to realize is it's not hard work, it's leverage. And so an example of that, tell me if I'm right or wrong, here would be an example. Let's say I want to be a CPA and I go into business for myself and I do everyone's returns. Maybe I also do bookkeeping and I have however many clients. Let's say I'm maxed out at 1,000. I can't take any more clients and I make $250 a year. Whereas what you did is you maxed out clients, but then what you did is you used other people to grow a firm in that you were essentially getting a cut off the top of 5, 10, 20, however many other CPAs working for you. So now all of a sudden you went to a leverage-based model and then it significantly increases your income ceiling. Is that accurate?
Well, yeah, because and then we decided that wasn't enough. So
okay,
maybe we're greedy. I don't know. We just really want to serve more people is really what it came down to. And so we found it very difficult to do that within a single company. So and so what we did was we said, well, look, we'll just teach other companies how to do it. And so we've leveraged with these other CPA firms. They're still their own CPA firms. They still have their own personalities, but we have the systems. And so we can leverage it. It's not a franchise because we're just licensing our systems. We're not forcing them to do, to run their accounting practice a certain way. But what we're doing is we're saying, look, we want to leverage that. Leverage what we know, leverage what we've learned, writing tax-free wealth and doing, I've been in this business for 40 years now. So I learned the other day I'm elderly. I never thought I was before. And
well,
now
you're looking
I am.
Good. So I guess the passion keeps you young.
I get to go to the grocery store an hour earlier before other people, and be with in Arizona. That's being with the snowbirds. So that's always interesting. But what happens is that you learn after a number of years that you can only grow so much, and you learn what your talents and your skill sets are. Okay, and running an accounting firm was never actually being a manager, not my skill set. That's my skill set. Okay, so you really do have to find out what's your skill set. What do you love doing? I mean, I love doing podcasts. I love I do my own podcast. I love being on yours. I love doing PR. I was on the local television station just this morning before we got on together, and I love writing books. I love doing this. I love teaching. So that's what I'm good at. I haven't been into the office to work in the office for 15 years. They kicked me out a long time ago. They said, Tom, you come into the office and you just mess everything up. You disrupt everything. That's because managing is not my skill set. So, for example, a couple of years ago, I sold a CPA firm, a big CPA firm, and I decided to start all over again. If I'm going to teach others, I need to have the best CPA firm in the world. And so I decided, you know what? I know I'm not a good manager. So I went and hired a young woman who is, from what I can tell, the single best manager of a CPA firm in the history of the world. I mean, she is absolutely amazing. I knew she was because I'd known her for many years, and she runs the day-to-day operations, and she loves it. She doesn't want to be out in front in the public. She doesn't want to be bringing in clients. She doesn't want to be the rainmaker. Okay, she doesn't want to do that kind of stuff. So we find what we're really good at, and that's what we ought to do in our business. And if that means that we're really good managers, then we should build and keep having more people, and we can just keep managing. If we're good at developing systems, we should develop the systems. But if we're not, remember that there's lots of people that are willing to help us. And we just need to go find them and let them help us.
One of the things that people say when that comes up is, well, I don't have the money for that. I did not in the early stages as I shifted my business model. And what I ended up doing is meeting someone who is fantastic at everything I'm not. And he wanted to work on a profit sharing basis. And it ended up being the best thing that ever happened to both of us, because as the business grew, he made way more money than if he was a salaried employee. And for me, it was fantastic because he has ownership in the profit aspect. And I think that's an important thing for people to get creative about, because like you said, you may be really good at the massage and maybe you have a patented way that's great for people's neck, but your friend that just lost their job is fantastic at digital marketing, and they can target your zip code, and you guys can grow like that. Then you can train someone else with your patented system. And that profit sharing aspect is something that really helped me, because I wasn't in a position like yourself where I had built this tremendous company and I could pay someone, a very healthy 6-figure salary. And I think that's very important for people to consider, as well as the creativity.
Well, for sure. Now you have to understand, are you a good partner? Are you going to be a good partner? Because if you're not, there's nothing worse than having a bad partner. And if you're a bad partner, then you're not going to be happy in a partnership, right? So there are some people that frankly should never have partners. I've met those people. And in fact, I've had partners who were like that. They should never have had a partner, and we didn't stay partners for very long. And I love having. I mean, I've had one. My partner in Wealthability has been my partner for almost 20 years. And she's like you, just like you described. She does everything. She loves doing things that I absolutely hate doing. And she's a bit of a hermit. We call her the wizard behind the curtain, because half of our employees have never met her, just because she wants to do the behind the scenes stuff. Well, I hate doing that stuff. I'm terrible at it. So, finding people, and she wanted to be a partner. She started as an employee, but she wanted to be a partner. And I like having a partner. I'm good with partners. I really enjoy partners. Even my new, young woman who's running our accounting firm, she's a partner. she started as an employee, but very soon after which I asked her if she would like to be a partner, just because there's a feeling of ownership that comes, that's it's a little different than being an employee. But remember, we may be the last ones to get fired, but we're also the last ones to get paid. So if there's not enough money, we're the first ones to take the pay cut. I find it interesting. There's all this discussion about, all these people have taken pay cuts. I'm going, think about all the entrepreneurs that have given up pay entirely so that their employees can stay employed. There are millions of entrepreneurs right now who are not taking any money out of their business because they want to keep their business going, and so they're paying their employees. It may be even a pay cut for their employees, but they're not taking salaries. So you do have to remember that there's risk. There's risk reward in being an entrepreneur. But I'll tell you what, the reward is the biggest reward to me, frankly, Jake, is that nobody gets to tell me what to do.
So I've heard a lot of really interesting things that I think are very useful for people. And number one is understanding, first of all, that in a capitalistic society, in a democracy, the government is incentivizing you to do certain things. And if you do these certain things the way that they want, and you ultimately go into business for yourself and run it like a business as opposed to just a self-employed situation, you will probably increase your income, but you will also decrease your taxes first and foremost. Then, you talked at length about the importance of instituting leverage, either with other people or with other systems. You talked about at length the importance of focusing on what you're good at, and that can create more leverage. You talked about the importance of legitimately incorporating and not just saying I'm in business, is actually going and for instance, as you said and what I did, actually get your S corp and the just from the mindset alone, the shift that happens. Not to mention what happens when you end up not having to pay doubles on the taxes on both sides. And you said that the number one place that someone is taxed at is when they're C class, when they're self-employed, but they have not incorporated. You said that's a number one red flag. So that alone is worth the whole listen to someone that's doing it wrong as a self-employed. And they're saying, oh, wow, okay, or maybe I should actually go ahead and take the next step. What out of all those things that I said, and then anything else that I missed, and then of course we talked about once somebody's at a higher income level, starting to look at the next level up of strategically becoming more of an investor in businesses, assets, whatever it might be. Is there anything that I missed there that you think is very important?
Well, it's pretty simple. If you want to change your tax, you have to change your facts. Okay, that's it. If you want to change your tax, you have to change your facts. The key to a good advisor is to be able to tell you which facts you need to change. The most common question I get when I travel is they'll talk to me about something. They go, "Is that deductible?" I'm going, let's ask a better question. The better question is, how do I make it deductible? Okay, that's the better question. And I think one of the keys to success in life is asking the better question. How do I make this work? And if you want to know if your CPA or tax preparer, tax advisor is doing a good job, what you want to find out is, are they telling you yes or no? Or are they actually explaining how you actually get to where you want to go, right? No entrepreneur, I've never met an entrepreneur who want to be told what they cannot do. Not even once. Entrepreneurs want to know, how can I do what I want to do? So our job as tax advisors is to help you know, if you do this, this, and this, you can reduce your taxes. Okay, if you choose not to do those things, that's okay too. You'll just pay more taxes. You're right. But our job is to give you the choice. And the way we give you the choice is to understand your business and help you understand then which facts do you need to change. For example, the easy one is, biggest fact people should change right now is employee to being a business owner. right? Go from employment to business owner, you reduce your taxes. Go from self-employed to having a corporate to incorporating, you change. That's a fact. You're changing, right? You're changing how you behave. If you go to investing in production assets instead of stocks, okay, that's a change in how you're investing. So change in your facts and then lower your facts. And it's really the number one thing to remember. If you're comes to taxes, if you want to change your tax, you just have to change your facts and really find advisors, team members that are going to ask you good questions, because when they ask you good questions, they'll be able to give much better answers.
Fascinating. So one of the things that's very interesting is for someone that doesn't know a lot about taxes, which is me starting to learn more, and probably most people listening, is, you come on, you go, I'm going to listen to an accountant. But really what you are is you're a business owner and a business teacher. You're teaching people not only how to lower their taxes, but everything you're saying is just as good or better advice than anyone else I just interviewed Mark Cuban last week and had a lot of interesting guests on. Robert, is you're teaching people actually how to excel as a business owner. You're talking about leverage. You're talking about all these things.
Well, here's something I learned by, I'm a tax geek, right? I'm a total tax nerd. And what I learned by studying the tax law is there's no better guide to making money than the tax law. It actually is a really terrific guide to making money. I mean, think about this. Okay, so the purpose of an expense is to increase income. In a business, the whole reason you spend that money is to make more money. Otherwise, you shouldn't be spending the money, right? That's the purpose of an expense. Well, think about this. In the tax law, if you're going to get a deduction for that expense, you have to have a business purpose. It has to be typical. It has to be necessary to improve your business, and you have to document it. Now, you tell me, if you do those four things, aren't you going to make more money? So the tax law is a very good guide to not just reduce your taxes, but to building incredible wealth.
Fascinating. Wow, it's so interesting, because even going on, and when I first read your book, I'm like, I'm going to read a book about an accountant. I want to read a book about business, not accounting. But then once you hear what a very incredibly successful accountant has to say, it really, at the end of the day, it's true entrepreneurship advice. And right now, I think it's never been a more important time for people to really step into that aspect of their life, and a fantastic opportunity to set ourselves up for a better future. I kind of feel like all this crap happening, and in some sense, it's really a wake-up call for everybody to realize the government's not going to take care of them, and probably the business they work for isn't going to take care of them either.
No, that's true. Now's the time to take control of your own life. Take control of what you're doing. I know a lot of people are doing a lot of introspection right now. They're doing some personal development work, which I think is awesome. I actually think the most important thing you do as a business owner is personal development work. I learned that from Robert and Kim. They are the best personal development teachers I've ever had. And they spend hours and hours every day on personal development. When we train our CPAs and our tax professionals in the Wealth Ability Network, we spend most of our time on personal development. We're not spending a whole lot of time teaching them the tax law. We can do that. We do teach them the tax law. We're spending a lot of time teaching them how to be better business owners and how to improve their lives, have better relationships with their clients, so that their clients are happier and their clients are happy to pay them, so they don't have trouble collecting their bills. This is the type of thing we're teaching them, because business is very personal. When you're an entrepreneur, this is your whole life. We work way more hours than employees do. That. Most business owners work longer because we love it. It's because we love what we're doing. We're not waiting to retire to be taken out of service. We want more service. We want more opportunities to serve more people, and that's why we do what we do. And when you do that, life is a lot of fun. And like you say, the more money you make, the less taxes you pay.
It reminds me of a Jim Rohn quote. He said, if you work hard on your job, you'll make a living, but if you work hard on yourself, you'll make a fortune.
There you go.
So thank you so much, Tom. Want to encourage everyone to get Tom's book, Tax-Free Wealth, and websites, Wealthability, where I'm sure there's a lot of other really interesting and useful tools for people, correct?
Absolutely. Absolutely. Lots of tools, lots of help out there, and we just want to serve however we can.
Yeah. Awesome. Thank you, Tom.
Thank you, Jake.